Hello, today is Wednesday, March 17th, and thank you for joining me for another edition of the Market Commentator podcast. My name is Andy Willms, and I am the president and CEO of the Milwaukee Company. And joining me today is my son, Jake Willms, who is a quantitative analyst with the Milwaukee Company. Welcome, Jake.
Hey, thanks for having me back on the podcast.
We're very glad to have you. And today Jake and I are going to be discussing non-fungible tokens. But before we get started, please keep in mind that this podcast is for informational purposes only, and listeners should conduct their own independent research before acting on any information or opinions expressed during this podcast, and that the views expressed in today's podcast are Jake and my personal views and not necessarily those of the Milwaukee Company. And with that, I'll ask you, Jake, let's really just start with the basics. What is a non-fungible token, or NFT, I guess is how they're typically referred to?
Sure. So NFTs involve two things. It's the economic term non-fungible, and then also token, which implies cryptocurrency. So a fungible asset is something like the US dollar, or in Bitcoin even, where you can actually exchange identical things for the same value and there'd be no recourse. If I have a $20 bill and you have a $20 bill, if we swap $20 bills, no change in value has occurred in that transaction. However, non-fungible tokens or non-fungible, I would say, implies unique. So if I have a picture and you have a picture and they're not the same picture, we can't exchange those for equal value. So non-fungible really implies things that you can't replicate. We're talking, as I said, paintings or artwork, music. So then non-fungible tokens now these are assets that are verified through blockchain. That's where the token component comes from. And these are mostly verified through a cryptocurrency called Ethereum. If you've heard of that one, it's probably the second most popular outside of Bitcoin. Bitcoin's not popular in this medium. It's really Ethereum is the main driver here. And this blockchain is going to use it to record keep and provide proof of ownership. And it's also the means of the transaction. So it's going to be the currency used to buy and sell. And these cryptocurrencies are essentially attaching value and ownership to digital goods like images, GIFs, songs, videos, and it's creating a marketplace online through these sorts of things.
Okay, so let me get this right. So the blockchain technology, which is virtually unhackable, is used to track and identify the NFTs. And that way you can, because digital files are identical, right? Anybody can download a digital file, and you can't tell it apart just by looking at the file itself. It's the blockchain technology that's used to authenticate that it is the original, and then and also to authenticate who the owner is.
Right, exactly.
Does it keep track of how when it's transferred?
Yep. If you were to go on these websites to buy, you would be purchasing one of a couple things. There's going to be a token metadata, which is the term for the license that you're getting. And that is the information that's stored on a blockchain. And it'll also have things like either the original image or the creator, and they have a key. There'll be an ID for the token itself. This is just basic data to kind of describe what's going on. But in addition to that, there are different specifications that are made. So, for example, if you're buying something, an NFT, you're not necessarily getting the copyright to the content. That's a different thing. So a lot of the times, if you're going to be purchasing things like artwork, you're not actually purchasing the copyright to that, but you are purchasing that ownership of that NFT that is attached to the artwork, if that makes sense.
Yeah, I think so. I mean, like if you bought for a while, people were buying the, Disney when when they were still drawn by hand, the movies and whatnot, you could buy those little documents, the cartoons or whatever that were used to make the video, and you could buy that cartoon, but you didn't own the actual copyright to the cartoon character. Is that kind of the distinction you're making? I'm having
Yeah,
mental.
I think so. I'm not super familiar with that analogy, but I think that.
Okay, I'm dating myself. Like let's say you bought an original of a Coca-Cola sign or original Coca-Cola printed advertisement. You don't buy the copyright for it, but you own that sign or that ad.
Yeah, I think that's a good way to describe it. So
yeah, that's okay.
It's an interesting topic. I don't want to get too far offhand, but I will say that NFTs are bringing about an interesting discussion in intellectual property because of that component of it.
Yeah, I can imagine. I can imagine that. As a lawyer, part of me could see how this could raise a lot of novel questions that the courts haven't had to deal with before. And I would assume that there's probably even a question to what extent this is, something that the courts would have jurisdiction over, because the whole idea behind, blockchain is that there is no government in particular that authorizes it or controls it. So if you have a dispute over NFT ownership because of a problem with the blockchain, I'm not sure entirely who you're going to, who would have jurisdiction over that dispute. But I do see how the blockchain would be an advantage over a traditional piece of art, because traditional art can be forged or copied, or and it can be very, very hard to prove a forgery. Whereas with the blockchain, it's supposed to be unhackable. So assuming the blockchain is not hacked or destroyed, you should be in good shape.
Yeah, I mean, the best analogy that I've heard to try to create a comparison to what an NFT is, it's sort of like an autograph. So you could have a jersey or a picture or a book, any sort of thing. But if you only have one that's actually autographed by the original or autographed by an athlete or anybody, that one is the one that's probably going to have the most value. And so you could, in the case of an NFT, you could still download a picture online, but only one of them is going to be digitally authenticated on the blockchain
as being the original.
One will have the value.
Right. So it's scarcity that's the only source of its value.
Yes.
And I've heard that being as a grounds for criticism, but then again, that's it seems to me that that's what makes anything, a lot of things valuable, I should say. Look at stamps or baseball cards or whatever. If you have an original Michael Jordan rookie card, that's worth a lot more than if you got one that was a reprint of it. Even though they look identical, they have the same paper and everything else. It's the fact that it was an original rookie year card that makes it so valuable. The advantage for the blockchain is you can confirm it was the original, whereas with the trading card, it might be quite difficult to distinguish between the original and the fake.
Yeah, I completely agree. It's a really interesting development that's been taking charge as of the last couple of years here. The market for NFTs has really started to expand.
What's driving that, Jake? What's driving the sudden surge in popularity?
I would have to say, it's hard to credit it anything, but if I had to give my opinion on it, I would say it's the rise in the accessibility of being able to invest in cryptocurrency. So all of these, the major network I said was Ethereum, right? And on a lot of these exchanges, like Mintable is one example that I use to do some research. They have, like, a lot of their art and things that you would want to buy are bought on Ethereum. So you have to own the cryptocurrency to participate, which adds a step, which means that essentially what's happening is as Ethereum and cryptocurrencies are becoming more accessible to the consumer and their value is increasing, so too it is the demand and interest in NFTs, because those are being driven by the same component. Now, Bitcoin in particular is not as correlated because it's not used on the same scale as Ethereum or others, but regardless, I would say that generally speaking, the rise in valuations across cryptocurrencies at large is driving interest and demand for NFTs.
That makes a lot of sense. I suppose the pandemic has also contributed to it because artists haven't been able to sell their works in galleries, and musicians who rely on touring revenue are losing out on their royalties. And I think another thing too is you have a lot of people who've made a lot of money by being early investors in Bitcoin or other cryptocurrencies. And they're starting to recognize those profits, right? They're getting huge amounts of money, some of these people. And so it's only natural to expect that they're going to want to reinvest some of that money in things that they're familiar with that led to their original profits. We talked a little earlier about this artist People, who I guess is a Wisconsinite, by the way. I heard that he is
Really?
he's only been in art for about a year, I heard, and that he is from Wisconsin. But the Everydays, the first 5,000 days, that sold for 69.3 million. That was sold to someone who's been very involved early on in cryptocurrency. And the same thing goes for that Jack Dorsey tweet that sold for 2.5 million. So you have these guys who've made a killing in cryptocurrency, and they're buying something similar to what they made a killing in. And I guess that makes sense.
Something interesting that could be the case for the other demand is that a lot of these instruments that are being sold, I guess would be a good way to generally describe them, they have restrictions to some extent. I was looking at a picture, for example, that had a 5% secondary sale requirement, similar to that of a good example be in soccer. And they have, if you sell a player and then that player gets sold again a different time, the original team would get a percent of the revenue. And so that could be the case here, where if people may have put a 5-10% secondary revenue on the transaction, so then if those instruments increase in value at a later date and then they resell them, people would still retain some of the profit on that secondary sale, which is interesting.
Yeah, that's pretty. Yeah, that's really unique in a sense because, artwork, for example, or baseball cards or whatever, nobody charges. It's like a royalty almost, right? The artist keeps a royalty for every time that artwork, that NFT changes hands.
Yep.
And it's the blockchain that makes that possible, because not only does the blockchain authenticate the fact that it is what it claims, that file is what it claims to be. It also means that they can keep track of every time that file changes hands. So the blockchain can be constructed so that you can't change hands without paying the royalty, I guess is what I'm understanding you to say.
Yep, that is right. It is another interesting portion of this that can provide interest from the seller or even the buyer, because the buyer may be looking at something that is resellable, even if there's a 5% royalty on it, but they may see these as investments, which very well can be.
And this is where the generational gap gets really comes home, because for someone in my generation, we're so used to having physical possession of the items that we own, right? I mean, but if you're going to pay a lot for a piece of art, you want to be able to hang it up in your home, right? And you want to, or even baseball cards, or whatever that collectible item might be. It's something you can put your hands on, and this isn't something you can put your hands on. But my generation didn't grow up in with computers and with coding like you did. You've been coding since you were a very young man, a child, really. You started coding, right? And so maybe the idea of owning a file is attractive to people in your generation.
Yeah, I mean, I would even say that the whole gaming industry kind of helped normalize digital ownership. If you think about playing a video game, there's tons of examples of completely digital things that have a tremendous value to people that people will purchase. And I'm not going to bore you guys with specifics, but there's entire places that derive on trading real life money for digital belongings and even digital currency that would be used solely for a game. And so
Right.
I think that a lot of people, like you pointed out, that are similar in age to myself or younger, who grew up in an era where that was commonplace, have no sort of reservation in owning things digitally, and that may be a generational gap.
So, how do you derive personal enjoyment from owning the file, Jake? What is it? Just the knowledge that you own something that somebody else doesn't? Like I've collected cars for your whole life anyway, for a large part of mine, and all these collectible cars, they have value because they're unique, and the fewer of the cars that were made, the more valuable it is. But I can still enjoy looking at the car. I can still enjoy driving it. I can get some, personal, actual interaction with the car that adds value to me. How does a person who owns an NFT actually enjoy it personally? Is there any way to do that?
Now that's a tough question. I would not be able to say I understand how you get the personal enjoyment out of it, other than treating it like an investment,
Right.
or trying to attach value to the fact that you own something cool. Like
Right.
the NBA
Bragging
is
rights.
not involved, for example. They have been creating NFTs for highlights and moments in their league and selling them to what I assume would be NBA enthusiasts, people that are really passionate about the sport and would take some pride in owning a piece of that, especially since they may be able to appreciate in value as Ethereum and cryptocurrency grows as well. So you could have a moment, say, like a really cool moment in the NBA Finals that could be clipped and turned into a video, and then you could own that. You could own the
Right.
NFT for that video. You wouldn't own the copyright to it. You wouldn't be able to license it and sell it, or turn around and utilize it in every way. But you would own the note that authenticated it. You would have the autographed video, so to speak.
Right. And it's easy to look down at that, but to be honest, I don't see, I can understand. It's the pride of ownership, right? And some people get that's a big part of what they are. They really do enjoy the mere fact that they own something, gives them a lot of personal satisfaction. And there's nothing wrong with that. And then other people, that's not a big deal. So there aren't a lot of people who small percentage of the population collects things like baseball cards or whatever that only really have value because of the pride of ownership, right? I mean, but that there's still there's still a very devout group that do, and enough to create value for it. So I don't know. I guess, I think maybe the prices being paid today are unsustainable. And I heard that even Beeple said that he thought what was being paid today was an unsustainable price. But I do think NFTs are here to stay, and I don't see them, just dropping off the face of the earth because it's just a kind of a gimmick. I don't think that's probably the case.
Yeah, it's an interesting point about valuations with this as well, because as you know, from when we talked about Bitcoin, the way that there's an inherent scarcity programmed into them. And
Right.
if the NFTs are attached to the valuation of these cryptocurrencies that are scarce, that only is going to promote the value of them in the future as mining slows down and we reach that eventual end of the coins. So,
Right.
not to be confused with Bitcoin, I'm referring to Ethereum. That one was also scarce. So,
Right. Well, is there anything that we didn't talk about that you wanted to bring up to the audience today about these NFTs?
if anyone wants to buy me an NFT, find me.
That's an interesting point. I suppose you could do that, right? I suppose there's not all NFTs are super expensive, right? There's probably some.
Yeah.
Anybody can make an NFT, right? I mean, I could take a tweet that I wrote and convert it into an NFT.
You have to find a marketplace for it, but yeah, I mean, I can make an NFT too. I mean, anybody could.
Yeah, any picture, like any photograph you take or whatever, anything that can be created into a digital file could become an NFT. which means there'll probably be a very wide range in terms of NFT's value. But I guess that might be the one downside as we talk about it, is that, there's only so many original works of art that you can create, right? There's no more Monets. You can't do it. You can't create it, but all you can do is create a print. So there's only a few people who can create a fine piece of art, whereas anybody can create an NFT. So I wonder, and I have no opinion on this one way or the other, but I wonder if people start, every Tom, Dick, and Harry starts cranking out NFTs, if that's going to somehow impact the value of the ones that are currently being traded.
Yeah, that's true.
Time will tell, I guess.
Yeah, only time will tell.
One last thing, I guess, Jake, I'll ask you is, this is a pretty specialized area, right? It's probably not something someone who's not very, very familiar with cryptocurrency and very knowledgeable about NFTs in particular would want to invest in hopes of just turning a profit, because I know there's a lot that goes into actually owning an NFT of great value. It's not something probably for the uninitiated.
Yeah, I would agree with that. I read an article from CNN that talked about, it was really just an editorial where they spoke about the process of how one of their writers went and bought an NFT for the sake of documenting the journey. And they said a criticism that they had for doing so was that it was kind of a complex issue to take US dollars and get to the finish line of owning your NFT. There's multiple steps that need to be taken, and transactions and conversions that get you to that point. So I wouldn't call this an investment for all. It's really an investment for those interested. It's very accessible. I wouldn't say there's a barrier to entry other than maybe being able to accept risk that any cryptocurrency involves, but also being able to identify the right marketplace and get a hold of the cryptocurrency you want to transact in.
Right. All right, and there's considerable debate on whether or not these NFTs will hold up and stand the test of time. But that's no different than any other investment, right? I mean, not any other, but many other investments where, you can look at any stock being traded in any given day, and there's some people that'll be adamant that it's like Tesla. Some people have been saying that Tesla is way, way overvalued, and some say it hasn't even begun its rise. So NFTs are no different than many other more speculative investments in terms of how opinions differ as to what they're actually worth.
Yeah.
So all right. Well, Jake, thank you very much. A very interesting discussion. I learned a lot about this whole subject matter. Thank you for that.
Yeah, my pleasure. Happy to be on.
And before I wrap up, I just want to remind our listeners that they should not act on anything they have heard in this podcast until they've discussed it with a qualified financial professional or NFT professional who is familiar with your personal situation and your investment objectives. And with that, I'll say thanks again for joining me, Jake, and everybody have a great day.
This podcast is for general informational purposes only and is not intended to be a solicitation, offering, or recommendation of any security, commodity, derivative, investment management service, or advisory service. Nothing in this podcast constitutes or should be understood as constituting a recommendation to enter in any securities transactions or to engage in any of the investment strategies discussed. Viewers should consult with an independent financial professional or independently research and verify information presented in this podcast before acting on it.